Hi everyone, welcome to my presentation. This is the overview of the presentation. Napier Port Holding Limited, based in New Zealand, offering shipping services both locally and internationally, is a key player in New Zealand's trade, especially in North Island. As of 2022, they employ 341 people directly. They play an important role in New Zealand's economy. Port operation continued to be the main source of revenue, accounting for 97% of the share. Napier's export business accounts for 80% of its revenue. Most of this comes from log export. However, meat and seafood export account for only 6%. On the import side, fertilizers and petroleum products are the biggest. In short, the Port of Napier plays an important role in specific commodities. Napier Port has a robust infrastructure and skilled employees, offering quality services and strategic location in North New Zealand. However, they highly depends on port shipping, with a focus on large orders which can reduce efficiency. The opportunity for Napier is supportive New Zealand policies, global economic strategy, and increased free trade of growth potential. The threat for Napier is competition for nearby ports and overseas ones with specialized services challenging their pricing and client base. From a valuation perspective, the market price should be 1.74, yet the current stock price stands at 2.33. This suggests a potential overvaluation in the market by over 25%. Therefore, my recommendation is to short the investment in Napier Port Holding Limited. The company's business growth was lagging, its digital operation was limited, and its workforce was small. While the company encouraged shareholders to participate in strategic discussion, the lack of clarity in these meetings prevents long-term planning. The company's long-term growth rate has declined, suggesting that the company's competitiveness is weakening. In recent years, the company's profitability has been challenged. In order to attract investors, they has resorted to dividend payment, but this strategy may not be effective in the long term. In conclusion, although Napier has significant position in the market, there are some issues regarding its growth, operation efficiency, and policies that investors need to be wary of. The New Zealand port industry has been growing at a good speed. However, the slowdown in expansion is evidence of this. There are a number of factors contributing to the slowdown, the most significant being the sharp rise in the cost of international freight and the shortage of skilled labor. Notably, inflation and rising labor costs has created additional challenges for New Zealand port industry. Ensuring the timeliness and the accuracy of cargo movement will be lead to higher operating costs. The industry is highly attractive for investment, but is extremely sensitive to change in external environment and faces major challenges in terms of the continued demand for infrastructure capital and the competition for its peers. I analyzed data from the past 5 years to project the next 5 years for Napier. Use averages for constant growth predictions. I used the multiple analysis method, including a DCF and multiple model. The results suggest that Napier might be overvalued compared to its current share price, warranting further investigation. My projection shows positive cash flow, but with a decline growth rate, challenges for the company include limited competitiveness, and local market demand constraint. While the market price Napier at 2.33, our valuation is 1.74, suggesting potential overvaluation. In our relative valuation using the multiple model, Napier seems undervalued compared to benchmarked company, which might be preferred due to their advantages. In summary, our primary trust is in the DCF model's result, though the multiple valuation offers insights. Its reliance on the other company's data means it should be viewed as a reference, not an absolute. The report performed a sensitive analysis of Napier by adjusting the weighted average cost of capital and growth rate, which shows that the valuation of the company was relatively volatile and constantly stable. Although parameter adjustings were made, the valuation didn't significantly excess the current market value, suggesting that the company may be overvalued in the market. On the environment front, the company's carbon footprint is high and needs to be improved by 34 points, especially since carbon dioxide output has been increasing since 2021. This is not in line with the Global Sustainable Development Goals. On the social front, Napier priority employee safety, which benefits the company's reputation, but operating costs has increased compared to peers. In terms of governance, the company performs well in terms of board participation and decision making. In conclusion, Napier has made progress in environmental, social, and governance area, but a balanced approach is essential for sustainable efficiency. Influenced by COVID-19, Napier began paying dividends in 2020 to attract more shareholder investment. The shift in dividend policy could indicate that profitability and growth expectations are changing. Since 2020, they have been increasing their dividend, which implies potential operation pressure, making it a riskier investment option. The company's replication ratio has been increasing since 2020, suggesting financial management has been declining. Even as liquidity has improved, declining return of assets and return of equity has forced the company to transform its business, pushing it change its business model, such as personalized service and tighter cost control, in response to declining profitability. Lastly, in terms of hedging policy, the company employs a mix of forward contracts, interest rate swap, and commodity swaps. However, they still rely on an external consulting team for exchange rate hedging, indicating potential area for improvement. In conclusion, while Napier has made strategic financial decisions, there are areas, especially in environmental performance and hedging strategy, that require further attention. Thank you for watching and listening.